I think there's so many misunderstandings still, especially when it comes to institutional investors. So with our institutional investor background, we always face the problem how to explain crypto. Yeah, for a lot of people, it's still a scam or has no value. And so whenever we talk to clients or colleagues, we just faced a lot of questions. And so we thought it's really time to blend both worlds together. Yeah, so we don't separate and say, hey, that's either you're just in crypto or just in TradFi. We think it's an asset class which belongs into a portfolio with traditional assets, stocks, bonds, commodities, etc. And that's the aim of the book. Yeah, how to blend it and how to be facts and figures oriented.
No, I think we are addressing private investors, institutional investors, of course, but in the end, every person who's interested in this meeting of technology and finance. And it's written in terms that everybody who's interested may understand it. And the goal is to keep people open-minded. In the end, if you read this book and you say no to crypto, it's okay because you have decided based on facts. And if you say yes, it's even better because you made your decision based on facts. And that's I think it's a fun to read book. But it's sober, it's not euphoric or so. It's really evidence-based, and that makes it a good match for everybody interested in these topics.
2024 seemed to be the year of the meeting between crypto and classical finance. And therefore, we are excited to invite two authors of a book coming up this week or last week about mastering crypto assets. Welcome to Martin Leinweber and Jörg Willig. Let's start first with a short introduction about you guys. Maybe you could start, Jörg.
Yeah, sure. I have a background in asset management, working for about 2 decades now for German asset managers and banks. I graduated in computer science, so that's my technical background. And yeah, this finds a nice intersection with crypto assets.
Martin?
Yeah, I'm a classic economics TradFi guy, I would say. Yeah, I also worked for many years in asset management. And since 2 years, I'm working for an indexing company and just focusing on digital asset indexes, where I talk a lot to also Web3 companies, clients who want to issue exchange traded products on crypto. So so I'm mixing both worlds now, so to say.
Yeah, and this book, Mastering Crypto Assets, why have you written it, and who are the target groups for this book?
I think there's so many misunderstandings still, especially when it comes to institutional investors. So with our institutional investor background, we always face the problem how to explain crypto. Yeah, for a lot of people, it's still a scam or has no value. And so whenever we talk to clients or colleagues, we just faced a lot of questions. And so we thought it's really time to blend both worlds together. Yeah, so we don't separate and say, hey, that's either you're just in crypto or just in TradFi. We think it's an asset class which belongs into a portfolio with traditional assets, stocks, bonds, commodities, etc. And that's the aim of the book. Yeah, how to blend it and how to be facts and figures oriented. And then I think then you can reach and talk to institutional investors and not just saying just hodl it and all in crypto.
So the target group is mostly institutional investors or anyone that is interested in this integration or convergence, as you may call it.
No, I think we are addressing private investors, institutional investors, of course, but in the end, every person who's interested in this meeting of technology and finance. And it's written in terms that everybody who's interested may understand it. And the goal is to keep people open-minded. In the end, if you read this book and you say no to crypto, it's okay because you have decided based on facts. And if you say yes, it's even better because you made your decision based on facts, and that's I think it's a fun to read book, but it's sober, it's not euphoric or so. It's really evidence based, and that makes it a good match for everybody interested in these topics.
When I'm moving around in the Nordic finance sector and talking to banks, they call this digital assets. Whether it's a way to avoid the use of word crypto, I don't know. But you have made the title Mastering Crypto Assets, and why haven't you done that? Why haven't you branded the book a little more easy to eat, sort of?
Yeah, I think you're right. Digital asset sounds more serious, right? But at the end of the day, I think in 10 years or so, we just have digital assets. So stocks will be digital assets, bonds will be digital assets, and the lines will blur. But the thing is, if you tokenize a stock, it's still a stock. It doesn't change my portfolio, my risk and return stream. The same if I tokenize a bond. So I think people still have a hard time to assess what are those classic crypto assets, Bitcoin, Ethereum, and other altcoins, which provide a unique revenue stream. Yeah, you have a kind of different utility mechanisms. It's also harder to value, or maybe you need new valuation concepts. And so that's the reason why we focused on crypto assets. But I really do think that, so I'm called a digital asset product strategist. Maybe I should have another title in 10 years, yeah, because that's not, won't be the difference anymore. So that's my perspective, yeah.
It's like the internet, you mean? Everything will be tokenized.
Yeah, similarly, yeah. And maybe you have new kind of stocks and bonds, but I think the hard question is still, when I talk to clients, it's still about Bitcoin, believe it or not. Yeah, what is Bitcoin, and then maybe Ethereum, and we are so far away from the other altcoins, and so people really have to understand it step by step, and that's the reason why we focus on the crypto assets. Yeah,
It's perhaps
yeah.
Interesting. Digital asset is a very generic term because every stock or most of the stocks and most of the bonds are digitalized. There are not many physical stocks nowadays, but a crypto asset, crypto is referring to the cryptographic methods, which are the base of the blockchain. You have a lot more opportunities. You may create crypto bonds, which have a lot of code-based regulation integrated, which make it really a different asset. And so crypto is more specific, but of course we use both terms in the everyday talks. But I think crypto is more specific, and digital sounds a little more serious. I think that's why many institutions or regulators use it. But for me, it's too generic to be the perfect term.
Both of you sort of have a background in classical finance and have worked also within different types of institutions on that regard. Why this interest in Bitcoin, if we start with Bitcoin in the beginning?
For me, it was just this intersection of finance and computer science, of course, which made me interested in it. And it's if you're a little in computer science, you know that Bitcoin didn't drop from the sky, that it has a longer history of people trying to create a digital currency, an off-system asset, to say it in their terms. And this is, of course, of natural interest to me because it's just this intersection. I didn't expect it to be so successful because you never know it in the beginning. But the interest changed. First, it was tech from a technological standpoint. It was interesting. Now it is really the robustness, an asset that is off system and is so robust that it really works smooth over since its inception, works smoothly, and it becomes more of an economic issue now that it has survived for a long time. So now my interest is not from the technological standpoint alone, but it moves into this economical world. how will Bitcoin or other crypto assets influence the world of economics, markets, the transaction space, brokerage, and so on. And it's a multifaceted topic.
And also, I think what is really fascinating is that you have a digital bearer asset. Yeah, you can really own it. So besides gold, which you can store at home, there are not that many assets you can really own. I mean, you can buy an ETF and a stock, but if your login button on the broker side is missing, how do you access it? And that's the fascinating thing, that now it's possible for digital assets to really own it. Yeah, and that's completely fascinating.
Is that also the reason for investors to buy into it? What defines it as an asset class compared to stocks or bonds or gold or whatever? What do you guys think?
Yeah, I think first of all, you have to clarify that it's not just about Bitcoin. And although we have over 20,000 token now, which is also confusing to a lot of investors, many people think, okay, that's over 20,000 competitors to Bitcoin, which is not true. Yeah, so you have really a token ecosystem, which can be defined by different sectors, and also which provide a unique return and revenue stream. It's a completely different beast than, let's say, stocks, bonds, commodities, etc. Although some people try to compare Bitcoin with commodity, you can make the case. You can also say it's a kind of digital gold. But at the end of the day, if you look at the risk and return stream, that's really unique. Yeah, you never had such a high-performing asset with multiple 70, 80, 90% drawdowns. And I mean, we interviewed Peter Brandt in our book, and he's fascinating that even on a log chart, yeah, you have a parabola. How is that possible? Yeah, and you also have that for other tokens. And so if you can compare that, maybe it's like a startup investment, but a liquid one. Yeah, and it's traded almost on day one. Maybe not the seed A round, but maybe series B or C. And that's something every investor can do, every retailer. And that's not something you can do in TradFi. Yeah, if you want to invest in a VC fund, you have to be a qualified investor or an institutional investor. But here, every retailer basically can invest. And so it's really you have a multitude of assets. You have a unique risk and return stream, and so also from a technical perspective, you can't compare it to other assets. And so we defined it in one of our chapters as a distinct asset class.
And the Bitcoin as part of that, because I think you're quite right that you are defining it as an asset class with different protocols and different coins with different features. But what is specific with the Bitcoin? Someone talks about it as a place, an asset value that you can compare it to gold. And the other one is sort of the future internet of money used in transactions. How are these two? Are they exclusive for each other, or is it mostly a store of value that is the value of Bitcoin today?
From the structure, it may be a store of value. It's robust. It's quite simple for a protocol, and it's very focused on what it does. I mean, every blockchain network just stores states of a network, and the states in the Bitcoin network are just the addresses and the associated Bitcoins. Not more, no less. Besides some smaller details. If you compare it to Ethereum, for example, Ethereum may state states as complex as you like, and it's more versatile, more flexible, but it's very opaque. It's very hard to assess what is happening within the network. So Ethereum is completely different from Bitcoin. And if you are searching for a store of value, I mean, why is gold a store of value? You know, there is a defined supply. It's not very volatile. What supply comes onto the market. In Bitcoin, it's defined by the protocol. It's even more clear than with the gold market. You may look at the network, and it's simple, robust, and it works. So these are good traits of a store of value. And if people accept it, it may be a store of value. I mean, it's not defined by the technology, but by the acceptance of the people. And people will accept simpler things as a store of value more than complex stuff in the long term. The future internet of money, it's really hard to say. I don't know, Martin, what do you think? I think it may be the base of some monetary system within the internet, but it's a bit like search engines. We are very, very early in the early innings of this development. And, you know, not many people will remember Lycos or Yahoo as a search engine, because Google came later and moved the whole market to a new level. And you never know what's in the box in the next 20 years. But Bitcoin could be a good base, and other protocols may use it or may use a completely different approach. And perhaps there will be many competing internet monies. I mean, Web3 is a topic of its own. It's very complex, very interesting. And I don't think there will just be one internet money. It's my opinion.
Yeah, I think people overcomplicate things here. Yeah, so money is, for me, or you can define it as money or the difference between money and currency. Yeah, currency has a liability. Money, as gold and Bitcoin, they don't have a central issuer. Yeah, there is no liability associated with it. And I think central banks, they hold gold. You don't also use gold for your daily payments. And so I think Bitcoin is also not suitable for this daily payment thing. I don't think you want to be the pizza guy. Yeah. And so for me, it's still this store of value thing, maybe this base money thing, but we have so much better alternatives for this payment remittance thing. Yeah. If you think of stable coins or other dedicated payment protocols. And so, I know the Bitcoin maxis, they think Bitcoin standard, you do everything with Bitcoin, but I don't think that's realistic.
No, I think there's not much happening in the money space. Also, people working on on-ramp and off-ramp and all this type of mergence between the classical and the crypto space. So maybe we should move forward and dig a little more on the Bitcoin side, because it is the talk of the town. Also, maybe it's easier to talk about it for classical people. But then the question they will ask is, how can you value it? And we have people in the Nordics that are leaders and investment managers of large Nordic banks that are saying that there's nothing there. There's no value there. And they're starting to ask, what is the cash flow? What is the value on the balance sheet? And it's hard to define. What will your answer be to that type of questions or critic?
I mean, the question is, what is the value of the krona? What is the value of the euro? What is the value of the US dollar? I mean, these are currencies, and currencies are just, the value of a currency is acceptance and trust. If trust breaks down on a currency, its intrinsic value is zero. And with Bitcoin, it's similar. You may use, I think it's the best approach, a network-based approach to value this token. But I mean, it's not a discounted cash flow model, of course, because there are no cash flows. So I know that there are people arguing, and it's not safe to say this network-based value is correct. It's just one approach to give it some sense. But in the end, if you view it as, in the case of Bitcoin, there are other tokens who generate cash flows. But if you just look at Bitcoin and you view it as a currency or as a store of value, I mean, what's the intrinsic value of gold or any other currency? It's just supply, demand, and trust. And if there's no trust, there's no demand, and then the price moves in the direction to the south. And if people accept it, there is some value. But you cannot say, okay, the value is $40,300 per Bitcoin. I mean, there is no scientific background to judge this. But what is interesting regarding the what may people like Bitcoin, it's really these off-system characteristic. I mean, you say if you have normal times in the capital markets and everything is just working smoothly, you say, I don't need something out of the system. Our gold is unnecessary. Bitcoin, I don't know, it's too hard to buy and too hard to store. But as soon as you have a financial crisis, just look at some other countries where there are currency crises, like in Turkey, for example. You look at things differently and you think, okay, to have something out of the system is a value in itself. And so the judgment what something is worth is depending on the situation. It's depending on where you sit, where you live. And there is not one global value, one global correct value of such an asset.
And it's also just focused on Bitcoin, right? There are so many protocols which have a cash flow. Yeah, for example, you can stake ETH, you get a kind of a yield back, and Ethereum, for example, has an annualized revenue of $3 billion or so. Yeah, you have, for example, decentralized exchanges, Uniswap, which does almost the same volume as Coinbase, which with a handful of people, and if you use the protocol, you pay a fee. So the question is, okay, where does the fee flow to? Yeah, does it flow to the protocol? Is there a fee switch so that the token holder can get it? But for those kind of protocols, I would say you can also apply a DCF model, something like that. So it's not based in the crypto asset class that you say, oh, you can't value it. It's maybe harder. You also have to use network effect models. Yeah, we talked about that in the book, but it's not impossible.
And many protocols have a kind of a treasury where a lot of the earnings go into, which is invested into development. But if you say you have a protocol which is complete, you may just distribute the earnings. I mean, if you have a large protocol like these exchanges, these are base cases for distributing earnings. And if you have just a few people, a robust protocol, and you have a constant cash flow, these protocols may have really a huge market value based on their cash flows alone.
And this year, something happened earlier in January where the US finance authorities, SEC, approved after 10 years, I think, that you could launch ETFs, sort of a fund, based on Bitcoin spot. And since then, there has been a lot of activity. There are 9 new providers that are have issued ETFs, and there are billions being invested. How important is this, and is it good or is it bad? Because you could sort of saying that it is the system, the old system, that moves into the crypto world, or how is that?
I think I see it as a Trojan horse. You know, you bring crypto into the realm of TradFi, and then I think it's just a question of time before you really digitize everything. But on the other hand, it's really super important for the adoption, because you know where the money is. The money is with the boomers. So those guys, they buy ETFs, and they don't want to store their seed phrase somewhere on a sheet of paper at home or somewhere else. So that's also a great risk. And it's really fascinating. If you look at the spot Bitcoin ETFs, they trade super efficient, 1 basis points wide, in the billions, super liquid, something you don't have in the crypto world, right? If you look at this tokenized products, for example, everybody is keen on. There's no secondary market liquidity. So from that perspective, you can say we have tokenized Bitcoin via the ETF wrapper, but very efficiently. And it has an effect also on Europe and also all around the world, because suddenly Hong Kong is applying, as Hong Kong asset managers are applying for spot Bitcoin ETF, because if BlackRock is in, the perceived career risk is suddenly lower for everybody. And so really the large institutions and money now, they have less and less arguments to say, oh, I can't invest in it. It's not regulated. It's a scam. So yeah, you're losing arguments. And so that's really helpful.
In the end, I think it's great for adoption. It's great because you have an asset which is which has a clear path from the regulatory side, which is easy to treat regarding taxes. And I think many people are a bit disappointed that BlackRock and large asset managers started these ETFs, because it's just the other side of we tokenized everything. Yeah, these TradFi will be tokenized. Everything goes into the digital world. I mean, this is kind of naive. Even if everything is tokenized, this tokenized world will be highly regulated, of course. And there will be tax issues. There will be money laundering laws, of course. This digital world will very much resemble the traditional or conventional world, of course. It's naive to think that this will be some kind of lawless system.
The volume of these ETFs, the inflow is large, even if Grayscale is at the same time getting rid of a lot of Bitcoins. But the inflow is more or less 5 or 6 times what could be compared to the effect of the halving, which will come in April. So does the halving still have any meaning, or is the market now being driven by these ETFs?
I think the halving, the problem is we don't have that many data, right? We just have a few halving cycles. Everybody's looking at it. And yes, if you look at the chart and the halving, there seems to be a correlation. But the interesting thing is, if you overlay the US dollar performance, you almost have the same cycle or interest rates. So I think for me, it's more the macro environment, because think of it, we reset the financial system in 2008 with 0 interest rates. That was the birth of Bitcoin. And so you have these business cycles, these 4-year cycles, the dollar cycle, everything is aligning up with the halving. So could be the halving, but I bet more on the macro environment. Yeah, is the dollar stronger, or is the dollar weaker? And so that's my bet. But I don't care. So if everything is ideally synchronized, then you can pick your narrative, I would say.
Maybe true. There may be a high correlation or even a causation, but I think it's a statistical artifact because there are not that many data points. For miners, it's very important because it's directly impacting their cash flows and this mixture of transaction costs and mining rewards. So it has a huge impact on their business. And regarding the real long-term development, I wouldn't overestimate the impact of it.
In addition to the ETFs, there is also another trend in this meeting between classical finance and crypto. You have this tokenization of real-world assets. Kind of strange word because it has to do with bonds and stocks and maybe real estate and gold and oil, whatever. This is sort of being a buzzword. How important is the tokenization of real-world assets?
I think it's a really interesting topic from the asset management perspective, because you can tokenize everything. You can tokenize cash flows, you can tokenize illiquid assets and make them at least available. That doesn't make them liquid, but it opens the possibility of making illiquid assets liquid, like art or forests or so. And what is really interesting is if you tokenize stuff, and you just go one step further and you say, okay, this is a crypto asset, a tokenized asset. You can integrate code into these tokens. And this makes it not just, as Martin described earlier, not just a carbon copy of a formerly not digital asset, but it makes it a really, really enhanced version. And there's so much room for development. I think it's a very important step, not only for asset management, but especially in asset management. It's a really a new dimension.
You agree, Martin?
I think it's super hyped at the moment, the real world asset thing. But I agree, over the longer term, it has a lot of potential to save costs, right? I mean, we have DeFi that's already in place, but of course hated from the banking system. Yeah, you could do it there easily, but of course everything has to be KYC'd in AML. So what I'm really interested in is that if you tokenize real world assets, that you maybe have also a new form of stocks and bonds. Yeah, for example, in terms of governance rights, voting. Yeah, you can do that directly, for example, very easily with your wallet, or also the distribution of cash flows. Yeah, there could be a new form how you do that. And also, if you blend crypto assets with the stock, for example, maybe you can also link the share revenue to the utility of the token holder, right? So, for example, do I use Amazon or not? Yeah, if Amazon stock would be tokenized, yeah, you can also reward your clients if they hold the token. And so there are really interesting new financial instruments possible. But I know we are a long way from it because it has to be regulated, right? And for the regulators, I think, yeah, it's too much, yeah, at the beginning. But I'm really looking forward to it in 10 years or longer. What is really possible if you blend the old and new world.
If you then take the view of a classical investor and they are curious about these new asset classes, should they go for the ETFs? Should they wait for some kind of tokenization? Should they buy an NFT project, or should they go for the real thing, Bitcoin or something? What would you be suggested, even if it's not an investor advice, if you understand?
First step, of course, is to read our book. And I think investors who start out should not get ahead of themselves. I mean, it's typical for mankind to say, okay, I have missed something, or to have the feeling to have missed something, and now I don't start with the basics, but I just go ahead and buy the most complex stuff and the most protocol. The protocol I don't even know what it's about. In the beginning, for private investors, it's good to get acquainted with the technology. So to buy stuff physical. I mean, you may buy cryptos for 10 euros or dollars. So it's not a large investment to get acquainted with the technology, how it works. And it's really fascinating. And it's a really a cheap endeavor to try this out. For institutions, it's almost, for most institutions in regulated spaces, it's impossible to buy, or it's not convenient to buy stuff directly. So it's a sensible approach to buy an ETF, of course. I mean, this is not the idea of cryptos, of course. I know this, but for institutions, it's they have to comply with the regulation. There's no other way for many investors, and it's the better alternative than to use stocks as a proxy. Which is a very, very rough correlation between stocks, crypto stocks, and crypto assets. So get acquainted to the technology. If you like to start out, get information, take your time, don't hurry, don't get FOMO, and start small. And in the end, I think it's like with most other new developments, go the path of least regret. If you do nothing, and it goes to, I don't know, 1 gazillion, you say, oh, I should have invested 1,000 euros. And if you buy 100%, if you allocate 100% of your pension into crypto, you may regret it as well, because you don't know. Perhaps it doesn't go to 1 gazillion, but it goes to, I don't know, 1. So start small, get your information, and take your time. Stay calm, and don't follow the enthusiast euphoric path. Just stay sober.
But In this year, 2024, we have a half year behind us where the crypto winter seemed to be over, more or less. There are more and more developers starting to develop solutions. And we have these ETFs and we have these token things. And the classical environment seemed to be more curious. Are we in sort of an inflection point regarding the relationship between crypto and classical finance?
Yeah, I really do think so. You know, when Larry Fink is pitching Bitcoin and Ethereum on TV, yeah, the owner of the largest or CEO of the largest asset manager in the world, then you should listen to. Yeah, he's also pitching the real world assets thing. So you can also speculate on those kind of protocols. But I think finally it has. We always discussed the institutionalization of cryptos in several years. So we say that every year. But I think it's fair to say that finally we have that since the spot Bitcoin ETFs in a larger scale. So more investors over time. Think of it. I mean, we already gathered more than almost $2 billion in those spot Bitcoin ETFs on a net basis. Yeah, if you deduct Grayscale, that's the most successful start for ETFs in general. And ETFs are pretty old. Yeah, we have that since a few decades. So yeah, you see that trend is here for institutional adoption, and that's pretty bullish. Yeah. So I'm less focused on what happens this year, but I think for years forward, people should really take care of this asset class. And I mean, you write it in the book. Why not just invest 1%? I mean, we also do an analysis where the break point is, yeah, when it is too much, but people still struggling just buying 1%. And that's something I don't understand. And it will be a clear risk going forward, maybe not having 1%. Because what do you say to your client if a regulated ETF is available, if the largest asset managers in the world buy it, and it is the best risk-adjusted asset class since a decade or so? What do you say to your clients? Why don't you buy it into your portfolio? And I think that will be the tricky discussions a lot of advisors and bankers will have going forward.
And people should balance their short-term and long-term expectations. As with every technological development, short-term developments are often overestimated. Long-term changes are underestimated. So people expect this will be the year of Bitcoin, next year will be the year of crypto, and so on. And if you look back, I mean, this was the decade of crypto. It has already been very successful. And the next year will probably look almost like this year. And the year after will look like the preceding year. But in 20 years, you won't recognize the world because it's changed so much. And it's just this gradual change that you don't really see because you're part of it, which leads to changes which are stunning. Yeah, like I don't know, the smartphone story, internet story, and so on. You don't get it while you're on the train. Just if you have some birthday party and you look back, you say, "Oh man, the world has changed quite a bit." And this, I think, will happen this time as well.
This year, there's also something happening in Europe regarding MiCA, the regulation in the European Union, which is also probably being implemented in the countries that are part of the European Economic Area, which is including Norway, where there will be some use 1st of July and then in the end of the year. And of course, it doesn't regulate everything, but something. But you also have a history from before that I'm curious about. What is the status in Germany? We have heard about Siemens and Bosch doing things on the supply side. We have heard of Deutsche Bank and other ones experimenting with tokenization. is Germany ahead of a lot of other countries? Or how do you view that?
I think in terms of tokenization, yes. I would say less so in this Web3 crypto native thing. But again, also this, as I said, this tokenization is a Trojan horse for me. Yeah. So all the banks are working on the infrastructure, wallets, custody, and they convince their CIO, CEO with this series, we are tokenizing stocks, tokenizing bonds. This has efficiency gains for us. It's cheaper. Yeah, we should do that. And then you get the go for it. And then suddenly you can also buy Bitcoin or Ethereum. And so the next step then, there's less of a hurdle of buying these assets. And you see more and more headlines that banks, asset managers are also interested then in the crypto assets. And I think finally, most of them are waiting for MiCA to be effective. But also, again, I think the BlackRock story, this US story helps. Yeah, they see, and the Bitcoin ETFs are a massive success. So that will just help. And so I'm very optimistic regarding Germany, but also Switzerland. So I would say in Europe, Germany, Switzerland are leading these discussions, but other European countries will follow.
And what about you guys then? And now you have a book. You have before launched a book in German a couple of years ago. This one is in English. How have you evaluated the feedback from after you have launched the book? And do you see that people are curious to know more about this?
There's more feedback with this book than 2 years ago. I mean, the tendency is growth, and there's more open-mindedness, but it's sometimes there's kind of a structural blockade in many heads, and it's just the regulation is very important. It's more important when you write a book and you're enthusiastic for a topic. You always think from the facts-based side. Yeah, this makes sense. Do a little this, allocate 1%, but life is not that easy. And for many investors, regulation is the dominating topic. And you, as you said with MiCA and as Martin said, there is a lot going on. So there are many reasons to be optimistic, and we get a lot more feedback now than 2 years ago. So there is a kind of development in the pro crypto development. It's more accepted. Yeah, it's seen, and it's not only an off-system asset, but at least through the launch of the ETFs, it's kind of an in-system asset as well. So it's just easier for many to accept it and to talk about it. There's the career risk changed. Talking about it was kind of a career risk, and it changes in the direction of, okay, I should at least know that it exists. And I think this is the main development. It's very important because in the end, a lot of developments depend on a handful of decision makers. This is always the same.
But you started on saying that start reading the book because it's fact-based, sort of. And if you have read it and you agree that this is a good way to invest, or you don't, that is totally okay for you guys, as I understand. You are not evangelists.
No, we're not. We just want to. We wanted to write the book we would like to have when we started out, and there was no aggregation of information, and that's what we did. In the end, we wrote it for us.
Okay, then. Thank you, Jörg, and thank you, Martin, and good luck with distributing and letting more people read the book and know your thoughts about this. And thank you for visiting us in the Nordic channel, and we will share your views in our channels at least.
Yeah, thank you very much, Morten. I appreciate the opportunity.